Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci. And there's so much to talk about. We're going to talk a little bit about how Elon Musk is saving us a ton of money and what it means to your portfolio. I think you're going to be very excited about that. So stay tuned and welcome to the show.
Yeah, good morning, Southwest Florida. We always have a fantastic show ahead, packed with insights to guide you toward a fulfilling and prosperous future. But first, we have an exciting offer for all of you that are listening and tuning in today. You may have heard about Alfie's latest book, Making Waves in Retirement. It's been flying off the shelves. So due to overwhelming popular demand, he's decided to make a limited number of free copies available again. This book is your roadmap to rewarding retirement, brimming with valuable insights and real-life stories of investors Alfie has helped over the years. It's the ideal guide to confidently navigating your financial future. You don't want to wait. Don't wait to the end of the broadcast. Pick up your phone, call the operator and ask for the book, or all you have to do is text the word book to 239-747-1077. Again, text the word BOOK to 239-747-1077. We're always thrilled to have you a part of our financial community. We're here to support you every step of the way, and Alfie's book is just one of the ways that will get you to and through retirement. So we've got a great show for you today. Alfie, great things are happening. People are being confirmed. His cabinet is getting down to the nitty-gritty here, and Elon is really tearing through government waste and government corruption, and it's a great thing to see, isn't it?
It really is, because there's a lot of waste, as you can see, going that he's finding, and it's his team that he has a team that can look at something and know if it's right or wrong. That's how he has all these different companies. You have the SpaceX, you have Starlink. I mean, these are Tesla. You have these companies. X. He did that with X. He went in there and I think he fired
the workforce way down.
3/4 of them.
You don't need all these people.
And the problem is, the Democrats are fighting hard for it. They are fighting because I was telling a friend of mine, this is their slush fund. This is, so if someone's taking your slush fund, if you had unlimited money that you can grab at any time, and somebody comes in there and says, hey, we're going to take that from you, you're going to fight like heck. And that's what's happening right now. And they are fighting, and they are scared. And I hope the people realize that Elon Musk is not benefiting from this. Elon Musk is trying to save our country as much as Donald Trump is, and making these cuts and making people aware of where this money is going to, where our tax dollars. And he also has like a little ticker on there showing you all the money that they're saving and what it means to you. Have you seen that?
Yeah, they have a website set up.
Yeah, and it's going to get, they're just scratching the surface right now.
Yeah.
It's going to get bigger. Now, why do you want, obviously, we don't want to waste our tax dollars, but if we can get down spending and bring that debt down, when you bring the debt down, that's going to bring inflation down. So that's number one, and your value of the stock market is going to go up, and people's buying power is going to go up. So this is major, and the debt is what's killing us right now. If we can cut that thing, yeah, it's going to be a beautiful story.
Yeah, it's exciting to see. And, right along with that, it's going to take some time to sort of turn this ship around because, prices are still up at the grocery store. I mean, meat is expensive. Eggs are expensive.
Yeah.
What does that do to the markets? And what is that?
Yeah.
You always say it's factored in, but, when is it going to be factored in that these cuts are going to take effect to actually bring the price of goods and services down?
Well, the cuts, are you talking about the cuts for Elon's finding? Yeah. You'll start to see that. You'll definitely start to see that. That's probably why the market's holding up pretty good, because inflation, the core inflation was up higher than expected. CPI numbers came in hotter than expected for January, and part of that was due to the eggs. Believe it or not, eggs is represents quite a big part of the grocery bills, and eggs are are up because of not just inflation. It was mostly the bird flu.
Yeah.
They had to kill millions of chickens. So that is not going to, that represents, really it represents quite a bit of, for just eggs itself, represents quite a bit of the core inflation. So, about 10% of it.
Yeah, well, they sort of went up, then they came down. Now they're back up.
Yeah, they're
again.
back up.
Meat's up, substantially as well. Cattle, I don't know what's going on with that, but this is where people have to buy food.
Yeah.
That's the number one commodity. You need that to live. So if that's more expensive.
And we got it, again, it's only been three weeks. And this is all Biden stuff. This is not,
right.
And so sure he's having, I'm sure. And he's, so it's gonna take time, but you're not going to see the Federal Reserve, Colin Powell, Jerome Powell, I should say, Fed chairman. He spoke and he was talking about they're in no hurry to cut interest rates, because when you're cutting interest rates, that's going to tap into inflation even that much more, because that'll be more people spending. The economy is still doing good. Jobs are still out there. They're holding on longer, meaning they're not changing jobs like they used to. So people are holding their jobs a little longer. But it looks like inflation is gonna. We're gonna be dealing with inflation in 2025.
Yeah.
It just is. And again, when you have that kind of debt, $36 trillion, there's things you got to do to get that number down. So what they're going in and fighting, these agencies to find out what the numbers are. And you can see Congress, the Democrats are going berserk.
Yeah.
They're going berserk because this is, but you know what? What I'm hoping is that it's going to translate into them losing their job in 2 years from now, because, if this one congressman said, they're taking our money, and he that's right, and that's why I said ours is your money, not the people's money. It's your money. That's your slush fund you're getting. We're not getting it. We're paying for that. So I hope they lose some jobs. And usually in the second, when you have a midterm election, it usually doesn't benefit the incumbent. But this time I hope it does, so we can really get some things done in the second half, too.
Yeah. Well, the CBS poll says, and it's a liberal poll, 82% of Americans like what they see with all of this exposure and accountability and the checkbooks being open for people to take a look at. So, people like that. And
they've never had it.
No.
They've never had it. We've never seen it. And this is, Trump is going to go down. This is Newt Gingrich. He'll go down as one of the top 3 presidents.
Oh, yeah. I believe it.
And, so this is good stuff.
Yeah, this is why you want to position yourself with a certified financial planner professional. Alfie Townsend has 40 years experience in this industry as a CFP. He's also a fiduciary, which means his responsibility is to you, the individual investor, not the products and services that he offers here through the Advantage Retirement Group. And you want to take advantage of his retirement simulator process, which is a deep dive into your current portfolio to see what's really going on. You can meet with him in Fort Myers or Naples, and 2 beautiful offices. He'll take your portfolio and take it back 5 years and show you right on a big screen, side by side, your portfolio, how it's performed and how his portfolio has performed. And he's also going to take a deep dive into your portfolio and expose all the hidden fees that could be eating up your returns each and every year. He's going to make sure you're allocated properly, that you're diversified correctly, that you're not taking undue risk for the amount of return that you're getting. Why not take advantage of his 40 years of a wealth of knowledge as a CFP and take advantage of this retirement simulator process? Listen, he can only handle 9 people per week. You need to be one of the first 9 callers right now. Don't hesitate. Don't procrastinate. Pick up your smart device, call the operator, or text the word VISIT, V-I-S-I-T, to 239-747-1077. You'll get to a landing page, and it'll show you how to check out and take advantage of that retirement simulator process. Pick up the phone, call the operator, ask the operator for it, or text the word VISIT to 239-747-1077. 1077. Meet with Alfie in Fort Myers or Naples. You also can visit him online. His website is savingtheinvestor.com. Again, it's savingtheinvestor.com, where you will find a wealth of information about Alfie, his company, all the services that he offers here through the Advantage Retirement Group. You can watch many of the discussions that we have on your smart device right there on the website, savingtheinvestor.com. We want you to stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. Listen, if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. You know, Alfie's toolkit will give you a wide range of materials such as, will your money last as long as you do? Are you paying too much taxes in retirement? The Social Security Decisions Guide, and will a recession, if we have one, rob you of your retirement? Listen, you can get Alfie's toolkit right now by picking up the phone, asking the operator for it, or texting the word KIT. That's KIT to 239-747-1077. This is one of many ways that Alfie adds value to you and your portfolio. Alfie doesn't market time, stock pick, or track record invest. He has an income plan and a strategy that will get you to and through retirement. Pick up Alfie's toolkit today simply by calling the operator or text the word KIT, KIT to 239-747-1077. 1077. And Alfie, we left off talking about Jerome Powell, the federal chair, said it's going to take some years to get real wages moving up before he really gets to really do something. But how long do you think it's going to be before Trump, who loves the Fed rates to be under 1%, to start putting some real pressure on them?
Yeah, he's going to. You do have to get the inflation down first, but Trump will put pressure on him, like he's been putting pressure on, bringing hostages back. He's doing things.
It's amazing.
The last prisoner that was over in Russia that came over, the school teacher, and then there was one other one that was released. CBS was speaking to these people, that ambassadors, and that's all they do is negotiate. And they say it takes years, and he did it in a week. And the CBS commentator, she said, well, what did he give up to get that prisoner? And he said, they looked at each other and they rolled their eyes. They said nothing.
Yeah. We
nothing.
Brought the Merchant of Death for Brittany.
Nothing, and that's the difference. I was fortunate to take about 25 kids out to lunch over at Connors this week with Kevin Shell, and he's the teacher over there, and we partner with the kids that he teaches entrepreneurship with, and we took them to Connors. We had like this was once a year we do this because it was for stock picking, and who won out of the state. It's a statewide contest, and our boy here, Curtis, did very well too. So he built a portfolio, and he did good. And so but anyway, we took him over to Connors and just had a great conversation. It's great to give back to these kids. You know how we love giving back to the kids. But I was telling them that they're going to have opportunities in their lifetime. I said, you're going to have about 3 to 5 true opportunities in your lifetime, and some of you will realize that it is an opportunity to take advantage of it, and some of you will talk yourself out of an opportunity.
It's good,
because they'll talk themselves out, and then some of them won't even know it was an opportunity.
Right.
Okay. So, we've had, if you think about the opportunities you've had in your lifetime and what really brought you here, like you, Pastor John, came here from Jersey. You had an opportunity to serve here, and you did it.
Yeah.
And you left a high-paying job to really open up a church here in Southwest Florida. So that takes a lot of faith, and you did it. And so, the thing about what I want to say is we're writing a book with our attorney, and it's going to be joint venture with Jonas Weatherby and myself, and we're writing this book, and it's going to be a financial book and it's going to be a state tax planning book, and it's going to be a very, very great book. This is my third book, and I think it's going to be fantastic, and we're going to talk about different things that are not in my first 2 books. We're going to talk about why it might be good to we're going to talk about programs and strategies, and you probably never heard of them before. And like I said to a group of people this past week, I said, when I hired Jonas as my attorney, I said I had an attorney, but I kept asking him these same questions. What about estate tax? What about that? How do we reduce this? And it was all about, well, you just give it away. Give your money away, give it to charity. And I said, well, what if you don't want to? You're giving to charity, but you want to do other things too to reduce taxes there. And he couldn't give me the answer. So when Jonas was able to give me the answer, I knew I had to fire my attorney.
Right.
I knew I had to fire my attorney, and that's what I did. Fired him, hired Jonas. And when people come in our office and we're showing them strategies about 15% income, we're going to get you 15% income, and this is how we're going to generate the income. And then over here, we're going to grow your money. We're going to have some alternatives. And, an alternative is things that are not really correlated to the market. And that's what you want. It's not stocks and bonds. It's things other than stocks and bonds and cash. So, and then I get the same, look all the time. Why didn't my advisor show me what you're talking about here? Because this makes sense. And, and there's a book, called The Holy Grail. That's Tony Robbins. And, our company that we write a lot of business through, they partner up with Tony Robbins. He wrote a book called The Holy Grail of Investing. So there's, and the thing about it is a lot of advisors don't have access to things like we have, but a lot of them don't know about it. Don't know about how to create this income and how to, look at taxes, how to do estate planning. So I look at them, I say, you might have just outgrown your advisor. Like I outgrew my attorney, and that's why I let him go. And I said, a lot of times people come in and they have to let their advisor go because they're not, you outgrew them. And so when you come in and, we'll look at your plan, we'll compare the two plans and show you why we're putting this plan together, and you'll see it. You'll see it because we have a program to show you ours versus yours and the tax consequences and trying to reduce your risks, and then also the income that we're able to produce for our clients. If you're getting 15% return on this income, then that means you don't have to put that much money in to get the income. If you need $150,000 of income, you only need $1 million to get $150,000. If you need $75,000, you need $500,000. Usually, you would need $1.5 million to get $75,000 of income. So it's a big difference.
Yeah.
It's a big difference. So if you want to learn some of our strategies that we do, if you want to learn to see if you outgrew your attorney, if you outgrew your financial planner or your advisor, it's a great time to come in to do what we call the retirement simulator. And the retirement simulator is going to look at everything. It's going to look at what you're currently holding, what your advisor is putting you in, what the fees are. You always want to know what the fees are, especially if you don't see your fees. That's what we're going to expose to you, find your fees, and then see if you have any of these, programs that are institutional. That are, when I say institutional, that means you're not going to get them retail. You're going to get better prices on them because of the fact that, we're buying in higher volume. So this is how the wealthy people invest, using stocks and not so much in bonds, but alternatives. And then we can give you some great income from it. But diversification is what it's all about. Having diversification, reducing your risk, and increasing that income.
Yeah, it's a beautiful thing. And, like Alfie said, you may have outgrown your advisor. You're not going to outgrow him because he goes out to training and learning throughout the year, and he's constantly growing, and he's always ahead of the curve. And look, he has 40 years experience as a certified financial planner professional. He is Southwest Florida's financial premier planner and strategist, and he will get you to and through retirement. Why not get a second pair of eyes, a second opinion? Take advantage of his retirement simulator process, which is a deep dive into your current portfolio to see what's really going on, and he'll expose all those hidden fees. What if that saves you 3, 4, 5%? Just in that, that's going to make a big difference in your bottom line each and every year. You want to visit with Alfie Townsend in Fort Myers or Naples. It's very simple to do. Be one of the first 9 callers right now. That's all he can handle in his offices. Pick up the phone, call the operator, say, I want to visit with Alfie in Fort Myers or Naples, whichever is more convenient for you. Or simply text the word VISIT, V-I-S-I-T, to 239-747-1077. You want to have an income plan. If you don't have an income plan, if you don't have a strategy, if you haven't had your portfolio looked at and reviewed in 6 months or a year, you really need to come in, because if you're not rebalancing, if you're not in the mix that you want it to be in, and that mix has changed due to the stock market changing or the bonds changing or whatever holdings you have that cause it to change, you need to be rebalancing your finances regularly. Alfie's going to make sure that you're doing all of those things to get you to and through retirement. Pick up the phone right now. Call the operator. Be one of the first 9 callers, 239-747-1077, or simply text the word VISIT, V-I-S-I-T, to 239-747-1077. We're going to have more talk on finances and income planning and strategies right after this break, so don't go away.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we are here. And this is going to be a great segment, because these are questions from our radio show, our TV show, and our workshops that people ask all the time, and we're going to answer some of these questions. And these are ones that I always say are pertinent. That's why we're going to really dive into them, because this is what a lot of them are repeating over and over and over. And these are, it's almost like when the attorney says, when people ask, does my trust work here in Florida, even though I did it in let's say, Ohio or Michigan? And those are questions that are repeatedly asked all the time. And there's, I'm not an attorney, but I would say get it checked out on that question right there. But we're going to really talk about your questions and answer those questions for you. Welcome to the show.
Yeah, we're going to discuss smart investment strategies to help grow and protect your wealth. And if you'd like to submit your own written questions for Alfie to address in a future show, all you have to do is jot this number down. Call or text 239-747-1077. That's 239-747-1077, and you can get your question asked on the air. And we begin with Sam from Estero, who says, where do alternative investments like private equity or hedge funds fit into a high net worth retirement portfolio, especially under a more business-friendly administration?
Yeah, that's a great question. And when you first hear about alternative investments and hedge funds and private placement and things like that, you think, oh, well, this is for the really, really rich. I mean, the multi-millionaires, the billionaires, and that's what it used to be. It was very hard to get into some of these private placements and investment. These are, majority of businesses, John, are private. They're not public. They're private. And then when you have this private business, if they're, this is money you can loan them money, and to grow their business. They're not public yet, so these are opportunities that work really good because they are not correlated with the market. Okay, so if we like to use this as a hedge against, instead of bonds, because bonds, you remember in 2022, John, the bonds just tanked. They lost double-digit returns in 2022, and that was supposed to be the safe haven. Stock market lost double digits. The bonds lost double digits. The first time since World War II that happened. Bonds and stocks went down double digit. So alternative investments are a great way to give you diversification in your portfolio. You're not going to put 100% in there, but if you can, these are things that are not stocks, not bonds. We have some that own, part owners, some, baseball teams, football teams, and NHL. So this is nice where you can be, and what's nice about it, you're part owner of it. When you're part owner of it, that means you're going to share in revenue and share in things. So if you're looking for income, it's a great way. And they tend to not go down when that market goes down near as much as what the market goes down. Then they recover a whole lot faster. So yeah, it's a great way of diversification because they're not correlated with the market. So usually when you have alternative investments, I do state this, you have to be usually a accredited investor. That means that you have to have an income of like $200,000 or more, or you have to have net worth of $1 million or more, not counting your home.
Okay, beautiful. Well, Julie from Fort Myers asks, I have a large traditional IRA and considering a Roth conversion with potential tax law changes, and we never know what they're going to be, but how do you decide if converting now or waiting to do that makes more sense?
Yeah, well, right now the taxes are relatively low, and it will make sense after you meet with us, Julie, because we have a program that will show you how it's going to affect your Part D, Part B, Medicare. It's going to also show you what tax bracket you're going in. So the thing about it is, again, we're in a relatively low tax bracket right now. And if you look at the program, it will let you know, even if you moved into the 25% tax bracket on some of your money, it doesn't mean just because you move into the next bracket, all your money is going to be taxed at that higher bracket. It's only a portion of it. So you're going to have like a 15% bracket, a 22% bracket, and then it goes up a 27. So just if you moved up to the higher one, it's only that part of the money that moved up. So your overall might only be like a 20% cost to do this. So when you look at it, it could be something very it could be something very good to do, or it could be something where your income is so high and your bracket doesn't make sense to do it. So this program will let us know if it's right for you or not. So anybody out there that's looking at a Roth, it's Roth conversion, it could be something that is for you, or it could be something that is not for you.
Yeah, when we talk about taxes, we're talking about a ticking time bomb because we don't know what's going to happen. But Alfie is always ahead of the curve, and he put together what is a tax map. It's a plan. It's a strategy that you can get. You really need a plan with taxes and a plan that addresses uncertainties and instills confidence in your future. As a certified financial planner professional with over 40 years experience and a fiduciary, which means his responsibility is to you, the client, not to any products or services that he offers here, Alfie's tax map strives to help you achieve 3 key goals. Number 1, lower your tax bracket. That's going to put more money in your pocket. Protect your money when taxes rise. That's going to shelter your finances. And number 3, create tax-free income. And you can get a hold of this tax map. Be one of the first 9 people to reach out and grab a hold of it right now. You can call the operator, or you can text the word TAX, T-A-X, to 239-747-1077. Don't hesitate. Don't wait till we go off the air or the end of the broadcast. Pick up your smart device right now. Don't hesitate. Call the operator. Ask for Alfie's free tax map, or text the word TAX, T-A-X, to 239-747-1077. 1077 when you're listening to Saving the Investor radio broadcast today. We're answering your viewer questions. Don from Naples asks, you mentioned buffered ETFs as a way to balance risk and opportunity. Can you break down, number 1, how they work and which type of investors benefit most from adding them to their portfolios?
Yeah, good question, Don. So a buffer ETF, they've been out a while now, and there's what happens is they're managed ETFs. That means they are there's puts on them to protect the downside risk. So there's different ones. If you say I only want the 5% protection, I want the 10%, 15, 20, 30, they go up to 30. They even have 100%, but I don't recommend that. But if you had a 30% buffer ETF, that means now how ours works is the first 5% would not be covered. So if the S&P goes down 5%, you're responsible for that. But what if it went down another 20% in addition to that? You would not be responsible for that next 20% down. Okay, so it's protected the 30% total. 5 from you and 25 from the ETF. Now, the more you protect, the less you make in the up possibility. So on a 30% protector, you might make 12% of the S&P on the up. So if you said, hey, I'm willing to have the S&P anything over 12% I don't make, but if I can make 12% and protect my money close to 30% down, I'm good to go with that. Now, if you only wanted 10% protection down, you could earn like 15 to 17%. So what we would do is we would look to see the appropriate one for you, but they are a good vehicle for part of your money. You want to have money that you have some protection in there. You want to have money maybe all protected, and then you want to have money that, hey, I'm gonna take the risk and I'm gonna grow this money as high as I can. If it makes 40%, I want it all. So that wouldn't be a buffer ETF. That would be the stock market itself. So we would look at everything and put a package together for you that makes sense based on your risk. Remember, it always goes back to your risk. What is your risk? What are you willing to take risk-wise to get the return you're looking for? That's the bottom line.
Yeah, very important. You're listening to Saving the Investor radio broadcast. We're taking listener and viewer questions today. David from Cape Coral asks, I'm nearing age 73 and will have to start taking required minimum distributions. Are there proactive moves I can make now, like a partial Roth conversion, to manage those RMDs more efficiently?
Yeah, so if you're getting close to that age 73, or you are going to be 73, it's tough to do Roth conversions at that. You want to start those in your 60s, or, late 60s, mid 60s. You just want to make sure that you want to start when you're at the lowest income. You don't want to do them when you're working because you have high income. Roth conversions are tough during that. But if you're 70, we can look at it and see if we can get some of that money out. But usually, if it's coming around the corner, 73, you're going to have to start taking required minimum distribution out. Now, what we do with some of our clients at 73, let's say for argument's sake, you have to take out $25,000 out of your IRA. So if we took out 40 because your income is low, then that's a $15,000 Roth conversion. So you take your 25 out for your required minimum distribution. Then any excess that we take out, we can put that into a Roth IRA. So even if you're over 73, we can do it.
You can grow it back then, right? Grow it back up.
Yeah, you can grow back up because you're taking that 15 extra thousand and putting it over into a Roth IRA and then not paying taxes, or you pay taxes on the conversion, but then that grows tax-free where you can take it out down the road after you wait 5 years. If you haven't had a Roth, we're going to talk about that on the next side of this break. We're coming up, but if you never had a Roth, it takes 5 years before you can touch it. You're listening to Saving the Investor, and we will be right back.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Alfie has over 40 years experience as a CFP, and he's a fiduciary, which means his responsibility is to you, the individual investor. And Alfie's book was in high demand last week, and due to popular demand, Alfie is offering it again, a complimentary copy of his book awaits you. To claim your free book, just text the word book to 239-747-1077. If you don't text, call the operator and say, I want to take advantage of Alfie's free offer. I want his book. Send it to me. 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many stories about investors that he has helped save over his 40-year career. Call the operator or text the word book, B-O-O-K, to 239-747-1077. You're listening to the Saving the Investor radio broadcast, and we're taking your viewer and listener questions today. And one of the questions comes from Larry from Naples. He asks, I've built substantial wealth, and I want to have a meaningful legacy. Could a family foundation or donor-advised fund help my heirs avoid taxes while furthering charitable goals?
Oh, yeah, those are good where you can, yes, I mean, there's a whole lot of different things. So if you have high net worth, what we would really want to look at, Larry, is we would meet with our planner estate attorney with you. And what we would do is we would, you want a team at this point. If you have high net worth, we want to look at it as a team because it could be a family foundation. It could be where it's going to be a charitable remainder trust where you're going to take some income. The rest goes to the charity. But there's a lot of great tax planning that you can do. And we would really want to utilize the attorney and us as we're working as a team together for you. We would handle the financial side, and they would handle the put you in the right things because there's there are better things out there than just that then you might not have ever heard of. So that's what he would do, is look at the whole picture instead of just part of the picture. So I don't want to just answer what to do right now, but that's the way we would do it. We can definitely handle it. It's just it would be a one-on-one with our team and attorney to look at everything.
Yeah, it's a great question. And, from October to May, we always have a lot of snowbirds. And we do have Sue, who says she's a snowbird from Ohio. And she said, you mentioned insurance as a possible...
Love Ohio.
Oh, yeah. A possible safety net if policies change. How can life insurance be leveraged to cover estate taxes or provide liquidity for my beneficiary?
Yeah, so if you have life insurance can be used a lot of different ways. It could be used to overfund the policy early on so you can take out loans later on tax-free. So anytime you can get tax-free income from a life insurance or from Roth, those are, you don't care what the tax rates do because you're getting it tax-free. At the bigger the taxes go up, the more it goes up, the better the choice was to do tax-free income. So yes, you could do life insurance. If you are using life insurance to pay estate taxes, you got to be very careful, because if you don't put that in an irrevocable life insurance trust, then what you're doing is it's going to be a part of your estate. So that means if let's just say you're single and you have a $15 million estate that's over the limit of, let's say, $14 million, and then what happens is you have a $3 million life insurance policy to pay taxes. Well, that $3 million is going to be taxed at 40%.
Wow.
So you got to be very careful. So what we would do is put that we would create an irrevocable life insurance trust. The attorney does that, and then we fund it. We put the life insurance inside that trust, and then it's not part of your estate. So that's that's the way to do it, because now if your estate is very, well under 15 million or well under, even if it goes back down to 7 million, then you don't have to worry about putting it into a life insurance trust. But that's what makes it nice is it makes it where it's not part of your estate, and you're using that money, those proceeds, to pay estate taxes. And that's how we want to do it here at the Advanced Retirement Group.
Yeah, Alfie has a total plan that can get you to and through retirement. And a lot of advisors out there don't have all this technology and access to it, and also the team that he has here that can handle a lot of these things that are even beyond investing. You want to take advantage of that, give him a call, 239-747-1077. You can visit with him in Fort Myers or Naples. If you have a listener question and you want to get it on the air, you can also call the operator and ask for that as well. Thomas from Cape Coral asks, with the markets always reacting to news from Washington, how do I keep my portfolio proactive so I'm not just chasing headlines or pulling out during volatility? Do you recommend pulling out during volatility?
Yeah, well, Thomas, I'm going to tell you, market timing is one of the quickest ways to lose your money. You got to be right twice, when to pull out and, when to get back in. What's wonderful about the market, you're going to hear some news that's going to drive the market up or down. So you have to be in it for the long haul. You just have to be in it for the long haul. And to try to pull it out because you think some news is coming and then that news doesn't come, and then or they don't react to it, then you got to get back in it. So as long as you have a plan, and as the markets go down, remember, it's a good time to put more money into dollar cost average, but not to take that money out. It's so important to realize that what's wonderful about the stock market, it's unpredictable. And that's why there's returns you're getting excess returns because of the market, because of the volatility. If you don't want volatility, then you would get a CD. But you can make a day, or in some of these accounts, what a CD would pay in a year.
Yeah, it's amazing.
Yeah, so you have to take that in consideration. Don't market time. Just keep, market goes down, it's all right. Put some more money in when that market goes down. Market goes up, you can, if you need to take money out, that's your choice. If that's what you need to do, take it out on an up market, not a down market, but don't take it all out to time the market.
Yeah, Alfie doesn't stock pick, track record invest, or market timing. He puts an income plan and a strategy together for you that will get you to and through retirement. You want to take advantage of his retirement simulator process that is a deep dive into your current portfolio to see what's really going on. He's going to expose all the hidden fees that could be eating up your returns, going to make sure that you're allocated properly, that you're diversified correctly, that you're not taking undue risk for the amount of return that you're getting each and every year, and make sure you're rebalancing correctly. I'm going to expose all the hidden fees. He's going to do a lot of things for you that a lot of advisors wouldn't do. And you want to be one of the first 9 callers right now to either visit with him in Fort Myers or Naples, whichever is more convenient for you, simply by calling the operator and asking for the retirement simulator process, or texting the word VISIT, V-I-S-I-T, to 239-747-1077. Alfie has over 40 years' experience as a certified financial planner professional. He's a fiduciary, which means his responsibility is to you, the individual investor, not to any products or services that he does offer from the Advantage Retirement Group. Pick up your phone right now. Don't hesitate. We're about to go off the air. Pick up your phone, call the operator, or text the word VISIT to 239-747-1077. 1077. Take advantage of Alfie's technology retirement simulator process that will put your portfolio through a computer program, and it's going to open up really everything that's in there that's going to show you what you need to know about your portfolio and also his. 239-747-1077.
Thank you, John. And, I'm just listening to you, and these questions that our viewers and listeners ask, these are questions that we get all the time, and there's we'll get some more of this next week, but people want to know about there's so many things going on, and there's so many different programs out there, so many different ETFs and so many different stocks, and what do you do? It is very confusing. So that's what we try to do here at the Advanced Retirement Group, is we try to simplify to make decisions. And if you can simplify it and you have a plan in place, that's what it's all about. And that's what we do here, is we put a solid retirement plan in place where you can look at everything and you know that you have income coming in, where your income's coming from. If the market goes down, your income's not affected. So it's very important to have a total plan. And that's what we would do, is put the plan together for you, your income, your growth plan, your legacy plan, if that's important for you, and that's important for a lot of people. And I don't know if you ever watch our TV show. We talk about a lot of these same things on the radio show, on TV, on NBC2, right after Meet the Press, every Sunday at 11 o'clock. So 11 o'clock, 11:30, we are on, and it's a great show. People say they love it, and they DVR it if they can't get there. And then, of course, right here on 92.5, we've been on this station for many, many years. Jake the Millennial is big wig right now, and he's still helping us out. We love it. So until next week, be blessed.